Hello everyone, my name is Sadhwani Bhavesh. I am founder and CEO of B.A.Investments. I welcome you all on my channel. So guys, today we are going to discuss on trading. Yes, many of our viewers and subscribers were more interested in trading videos. They were sending me messages to make videos on how to do swing tradings and divergence trading. But rather than all this, I decided to make a video on what is my way of trading a stock or analyzing a stock. Whenever I used to take up a trade, I trade very rare, guys, but I just want to show how I analyze a stock before taking a trading position. So my method of trading is known as the shadow trading. Now what are shadows, I'll tell you further in the video. And the thing is, like chart reading, if you guys will concentrate on a chart properly, you will find that every chart has a story to tell you. Yes guys, now how to read that story, today I am going to teach you that. So let's go ahead. First of all, I want to tell you guys what are shadows. Shadows are basically found in the candlestick charts. Like you guys can see, this is an upper shadow and this is a lower shadow. Now these shadows are created by buyers and sellers. Like the upper shadows are mainly created by the sellers. They show that there is a selling pressure on a stock, and this is a real body, guys. These real bodies are basically, what I think so, is made up of news and the fundamentals that affects the stock price. And here is a lower shadow. Lower shadows are mainly created by the buyers. Lower shadows shows that there is a buying pressure in a particular stock. So basically these shadows shows that made me learn that there is always a tug of war between the buyers and the sellers. Buyers and sellers always keep on fighting to move the stock price up and down. So let's see on a particular chart like how these shadows look like. So this is the chart. So you can see over here, like this is a lower shadow, which means there's a buying pressure in a particular stock, means buyers are dominating a stock on that day particularly. And this is a selling pressure, and again you can see there's a huge selling pressure on a stock, means a huge amount of sellers were dominating on that day a particular stock. Now through these shadows, this made me understood, in the tug of war between the buyers and sellers, how the stock prices moves. Because generally people says for every buyer there is a seller, for every seller there is a buyer. So how the stock prices moves up and down. So this made me understood that whenever there is a lots and lots of buyers in the market, and they dominate on a particular day, they tend to buy on very high prices. Because for example, the stock price is going for 100, and they will keep bidding at 120, 130 and 140, means they are ready to buy at these levels. So they will keep on bidding high, so that moves the stock prices up. And similarly vice versa happens when a seller dominates a stock. They are not ready to buy it at a current price. For example, the stock price is 100, they will bid to buy at 90, then again they'll bid to buy at 80. So the buyer has to come down, and if he has to sell, so he has to come down at that price and sell it to the seller. So this brings the stock prices down. So this is how the buyers and seller dominate the stock price. So let's go ahead, and this is RSI, guys. This is a technical tool which I use. This is very helpful to analyze a particular stock. This is to cross check the move of a stock price. This will help you to analyze whether the stock price is generally going up or not, or whether it's a trap or not. So for example, there are only two levels which I respect in RSI, which I see in RSI. That is a level above 50 and the level below 80. So these are the things which I basically analyze. For example, if RSI is as 80, then there is a huge probability of a stock to fall. I'm talking on a trading perspective, not on investing perspective. So like on daily or hourly chart, basically I follow daily most of the time. So on daily chart, the stock tends to follow. RSI is 80. Now what does that mean? Whenever RSI is at 80, That means lots and lots of buyers have already entered into the stock price, means number of buyers that can buy more quantity of a particular stock has been reduced. There are very few buyers remaining in the stock market, in the stock market, which haven't entered in that particular stock. So means sellers can dominate from there, or even buyers can convert into sellers at this point of time. And what does it mean when the RSI is at 50? RSI is at 50 basically means a support level, and 80 it means a resistance level. At 50, that means many of the sellers can convert into the buyers, because it means many of the sellers have already entered into the market. And when the RSI was 80, they keep on shorting the stock price, and when RSI come at 50, lots and lots of buyers jumped in and they support the stock price. So this forced sellers to convert into the buyers, because they can't make the stock price fall below that, because already they have sold their huge quantities to make the stock price fall and earn from it. So 50 RSI acts as a support, and similarly 80 as a resistance. Now a stock price below 50, it means when the sellers were shorting, when the RSI was 80 and the sellers were keep on shorting the stock price, no buyer was willing to support the stock price. Means something is very bad happening in a particular stock fundamentally, so no buyer was supporting. So there is no need for sellers to convert into the buyers. So whenever the RSI is below 50, that means the stock is going to go in a consolidation phase for next few days or few weeks. It might possible. So basically, in simple terms, I make you understood like what the RSI tells you the story. So let's go ahead for my trading setup. Now what I love is basically a doji, because whenever there is a doji, I can clearly see there is a tug of, there is a upper flick and there is a lower flick, and I can clearly see there is a tug of war between the buyer and the seller. So I wait for the next day, like who is going to win. If the stock price is closing above the high of a previous day, means buyers won, it means they are at the dominant position. And if the stock price closed below the level of previous position, that means the sellers were in dominance, they won it. So there is a high probability the stock is going to move in that direction for next few days. So what I use, I merge it with the technical tool. For example, if the RSI is anywhere between 50 to 65, okay, and 60, because it can go up to all the way to 80 to face the resistance. So if the stock is RSI is anywhere between 50 to 60, and I get doji, and on the next day the price is close above the high of the previous level, that means it's a buy for me, and the stop loss will be the low of the previous day. For example, you can see a doji over here like this. There's a tug of war between the buyers and sellers. On the next day, this you can see a big green candle, and the stock price closed above the high of the previous level, and RSI was well at the levels of 55 to 60. So that made me buy the stock, and you can see the results. Stock went up for next few days, and I earned a decent amount of money. So this is one of the trades which I carried out. Took this trade long ago, and okay, let's take one more example. So on recently, on 21st of June, as you guys can see, I took a screenshot of a live chart on 21st of June. When I was taking the position, I took the position. You guys can see there's a doji over there. Clearly there is a tug of war between the buyers and the sellers, and on the very next day there's a big green candle, means the stock price closed above the high of previous candle, and the RSI was well at the levels of 56. So it was a clear buy for me. So then I calculated my risk reward ratio. So here you can see over here, this was my next target, because this was the first resistance that a stock is going to face, and the stock price started moving up. So I made the target. You guys can make the target as the first nearest resistance of a stock, or you guys can enjoy the 3 to 4% move and keep that thing as a target from your buying price. So I calculated the risk reward ratio. The loss was of 30 points in case it hits the stop loss, and my profit was of 60 points. So that was a nice 1:2 risk reward ratio. So that made me took that trade, and I'll just love to show you the results. And as you guys can see, it hits the target and I made a quite decent amount of money in that. I traded in cash market, so there was no fear of losing option premiums and all. So whenever I get a buy trade, I'm really very happy because I can carry out in a cash market, because in whenever you get a sell trade, you can't do it in a cash market because you can't sell a stock more than a day. So that's the reason I love to find a trade which is on a buy side. And here you guys can see that the stock price hit my target and RSI also hit 70. So there was no doji and there was no clearance. Just want to tell that on the very next day stock fall a bit. You guys can see on, guys can go on investing.com and check out the chart of HDFC Bank. So here is another example I will like to give you. Like for example, here's a doji, and on the very next day there's a green candle and the stock price closed above the high of the previous levels, and RSI is well at in the range of 50 to 55. So that made me a buy. As you can see, for the next 2 days the stock went up and I got a good amount of money. Okay, so now in this chart, what I used as an exiting strategy is that you can see there is a hammer over there, red hammer over there. On that day the stock failed to close above the high of the previous day, and as well as there was the nearest resistance at that level for the stock price. So these two things made me exit on that day. And on the next luckily I was right. On the next day stock price fell, and here also you can see. Okay, first of all, you guys concentrate on the blue arrow over there. Then here again also there is a doji, and on the next day stock price is closed high above the high of the previous level, and RSI is well below in the range of 50 to 55. As you can see, I bought it around 1180 or something, 1180 and 90 in that range, and the stock price went up in a nice way. Over there is a shooting star, as you can see. There is a green line over here at 1265. On that line there was a huge selling pressure on that candle, and there was a shooting star which was formed. So I saw that selling pressure, and that made me exit from the stock. So that was that's a trade. I got 10-20 points in that trade, and that's good for me for 2 days. And now you guys concentrate on the red arrow. Now there is also a doji, and there's also doji, and RSI is well below at 50 to 60. 50 to 60. But after 1 day there was a green candle that closed above the high of the previous level of the doji. Okay, but I didn't carry out the trade. Why I didn't carry out the trade? Because when the doji was formed, it took after the doji was formed, it took 3 days for a candle to close above the high of the previous level. I mean, the buyers were not that strong. Why it should take 3 days? It means they were too low. The buyers were not that dominant in the market. The momentum was not there, so that doesn't allow me to took the trade. Even though the doji was there, even though the RSI was well in the range of 50 to 55, I didn't took it because it took too long to break the high of doji. So that's another thing you need to keep in mind. It should break the high of doji on the very next day. That can show the power of buyers, because if it is breaking after 3 to 4 days, it doesn't gives me assurance that the buyers are strong and they can keep, or they can take the stock price up from a buying price. So let's move ahead, and you guys can use this method on monthly charts also. As you can see, this is a chart of 1% beverages. I haven't included RSI on that because RSI was not available at that point of time, but just for the journal study purpose, you guys can see there is a doji over here, and on the very next day there is a green candle, and it closed above the high of the previous level, and my stop loss was the low of the doji. And you guys can see the buyers were dominant, so on the very next day it closed above the high of doji, and the stock price went from 225 to approximately 375, and that's very nice 150 point moves you got in 7 to 8 months of period. I didn't carry out this trade, but this is just to show you an example. For example, over here you guys can write the stock till over here, And the thing I want to show you guys, when the 1% beverages fall hugely, you guys can see on all the previous 4 months. For example, you take that long green candle, from that candle and to the candle from where the falls begin sharply, till in all those 5 to 7 months there was a huge selling pressure on the stock. You guys can see this huge upper flicks, means the sellers were clearly dominating. The sellers and buyers were fighting with each other, but sellers were more as compared to the buyers, because stock price was always keep on closing the low as compared to the previous candle. There was not a time when the stock price was closing above the high of the previous candle. They were always closing below the low of the previous candle. So that clearly shows the some huge amount of selling is going on, and this is known as you guys can read the insider selling from the chart. If you watch it concentrately, means all the insiders, means the relatives of the promoters and each and everyone were knowing that something is about to come in the near future, and that's why they are selling in huge quantities. Okay, so like this you can read the chart properly and you guys can know what is actually happening with the stock. You can also catch the insider movements if you read the charts carefully. So you can move ahead, and you guys can see over here, as I was telling you about, when the RSI is below 50 levels, what can happen to a stock. So for example, you can see over here there is a doji, but it took 9 days for the buyers to break the high of that doji. It doesn't make any sense. I mean, their buyers were not in a position to take the stock price up. Sellers were so huge that that they were stopping them to take the stock price up. So the stock failed to do anything. Many of the people consider these days this as a breakout. I don't consider this as a breakout. I mean, RSI is well below at 50, and you guys took 8 to 9 days to break the high of the previous doji which was formed. This is not a good buy for me. Similarly happened next time over here. It took basically 8 to 9 days again to break the low of the previous doji which was formed. So this is not also a good sell for me, because whenever the RSI is below 50 and it took so long to give a breakout above and below the doji, it's not a good trade. It's just going to lose your premium. Okay, for example, you guys, the RSI is well below 50 and this given a breakout on this candle. Okay, so after that candle there was a fall for 4 days. As you can see, there are continuously 4 to 5 big red candles, but that's not possible. That's going to happen each and every time. I guess there was some fundamental news at that point of time that led that fall, but our setup was failed to catch that fall, and it's just fine. It's just okay to miss out some trades. At least whenever you are with setup, there is a least probability you guys can stuck into the traps. One thing you guys need to always remember: momentum is very very important for the traders. You guys trade for 2 to 3 days and 4 days. You guys need momentum. If there is no momentum, the stock prices are going sideways and the stock is not doing much. You guys are going to lose your premium, you guys are going to lose your time, and you guys are going to lose your patience, because many of the retail investors which I have met, they want very quick movements. So you can only get quick movements when you will be with the momentum, and how to read the momentum and how to be with it, that's what I am teaching you in this video in a very very simple way. If you will keep reading the charts properly, they'll tell you whether there is a momentum or not, and they'll tell the whole story, like what is going over there, what other people are doing. As you can see that RSI is well below 50 levels and the stock is not doing much, except that 4 or 5 candles that appeared because of the fundamental news, but that was not totally in the favor of the setup. So you guys have to avoid such trades. Now another example I'd like to take over is Yes Bank. Here you can see there is a doji. Okay, there is a doji. RSI is well below at 55 range. Okay, and on the very next day, and the stock prices closes above the high of the previous day's high. So stock prices close above the high of the previous day. That doesn't make you a blind buy, even though the RSI is 50 to 55. You guys need to check it when the end of the candle which is formed, though it's closing above the high of the previous high which was formed by the doji, but the RSI has already hit the level of 70. As RSI has already hit the 70, even though even though it has closed above the high of the previous day's high, you can't buy, because if the RSI hits the 70, that makes you the sell. So it makes you not to buy a stock. So as you can see the result after that candle, if anyone would have entered into the stock taking it as a breakout or considering it as a great momentum, it would have fallen in trap, and it would have made the stock price fall down on the very next day, and no one earned anything. Now why this happened? Because when RSI hits 70, it means almost each and every buyer is inside the stock. Everyone has bought the stock. There was no person is left who can put his money and buy a stock and make the stock price move up further. So that makes you alert that lots of buyers are already in. Now sellers can come, or these buyers can convert into the sellers. So stay away from it. As you can see, the stock starts falling from the very next day. So our setup helps us not to fall in trap. Let's take another example of a company. Okay, now this is the Titan. Okay, now in Titan, what basically happened, there was a gap up. So there was a gap up, so many of my friends, they thought this is a gap up, will enter into the stock, and will enter into the stock, because gap up always means there's a huge dominance of the buyers, and gap up always means the stock is strong, and gap up only happens on the fundamental news. So basically when there's a gap up happened, many of my friends entered keeping the low of the candle as a stop loss. I didn't enter. As you guys can see over below, the RSI was 70 to 80. That means most of the buyers are in. So that stopped me from buying this. And the result, the stock did anything for the next 9 days. It took 9 to 10 days to break the high of that candle. And those who guys bought on the gap up day on that big green candle, they earned nothing. They just wasted their time. Basically those who bought in options, they lost their premium, they were in loss, so they didn't got anything. So you guys need to read the charts properly to know the whole story, like what is going on and thing. So you guys can see over a gap up, and the RSI was about 70 to 80. That completely made you to stay away from the trade and stay away from the stock. Now, and example I'd like to tell you over here is like RSI is at 80. Over here you can see the blue box, there was a doji, and it after 2 days there is a big red candle that closed below the low which was formed by the doji. So what happened on that day, it took 2 days to break the low of the doji, and RSI was well below 80. So I thought, let's take some risk, because two factors are in my favor: the breakout of a doji and RSI is at 80. It is at peak, though it broke the low of the doji after 2 days. So I traded very small quantity, very small quantity, but on the very next day stock prices started going up. I was short, so I booked my loss. So all you guys also need to understand that your setup is not 100% accurate. You guys will be right only 6 to 7 times out of 10. Means you also have to take losses. Whenever your trade fails, that doesn't mean your setup is wrong. It's okay to get wrong trades in your setup, but it should not overcome the right trades on your setup. So many of the people, what they do, they get a one wrong trade and they change the setup. It's completely wrong. You should not do this. You should stick to your setup. Always try your setup, at least 10 trades with your setup. Out of 10, if you are getting 6 to 7 right, means it's the best setup that you can get. Now you just need to play with proper allocation. It should not happen the 3 you lost, you put huge money into that, and the 7 you won, you traded with less money. So that should not happen. You have to deploy equal amount of money in each and every trade, and ultimate result will be you guys will be in profit. So allocation also matters with the trading setup. Let's move ahead, and the example I took it over here is the proper sell. When you see a stock price, I got the proper sell setup. There was a doji on the very next day. There is a red candle big red candle you can see, and that closed below the low of the previous low which was formed by the doji. But you guys can see the RSI is at 50, means no buyers yet have entered into the stock. If they start entering, the stock price can move way beyond your buying price, so you can't sell a stock, because RSI at 50 means already all the sellers are in. Not they can convert into the buyers. So the similar thing happened in the after 2 days the stock price went up. So this setup can help you to save you from many traps, and they can tell you what exactly is happening in a stock. You just need to keep your mind calm and look at the charts properly, wait for the doji, and next day break out on the upper side and the lower side, and check out the RSI and trade accordingly. After that also you need to take care of allocation and the profit and loss, which you guys means the risk reward ratio which you guys are getting in a trade. If risk is more, reward is less, avoid the trade. Always remember guys, the stock market is there to serve you. It's not like that if you miss the trade you are not going to get the opportunity or next day or on next week or on the next month. You guys just need to be patient. Let stock market serve you. Let the trade come to you. You should not go to the trade, because whenever you go towards a trade you lose money, and whenever the trade comes to you, you always get money. There's similar example on what I said I want to share with you guys. Over here is, yeah, first of all, there's another chart in between I have put, and that's Avanti feeds. Avanti feeds, you can see there's a huge buying pressure over there, but the RSI is below 50, so it's well below 50. So on the next 2 days the stock price went up, but I didn't get into it because my setup was not allowing me, and later on you can see the stock price went even below the buying price. For all those who have bought on that day and holded the stock, they must have suffered the loss. All those who have exited in next 2 days would have been in profit, but even though there's a huge buying pressure, the RSI was not allowing us to take the trade. So the proper opportunity which I was talking with you guys was Hindustan Petroleum. Yes, this is the thing what I was talking with you guys, like allow the trade to come to you. This was a trade that come to me, and I made decent amount of money in that stock. Basically, as you can see, there was a doji, and after 2 days, after 1 day when the doji was formed, after 1 day there was a red candle that broke the low of the previous low which was formed by the doji. Okay, and RSI was well above at the levels of 70 and 75. So there was two things. There was a doji and the low was broken, even though it was broken after 1 day, but it was broken, and RSI was 73. And there was one more thing that was in my favor, that the crude oil prices were going up. So that made 3 factors with me, and the stop loss is very less. As you guys can see, the stop loss was of just 20 to 25 points, and if I am winning, I'm going to win big. Okay, because I knew something, the crude oil was going up, and the setup is also in favor of me. Okay, so I just took the trade and I made decent amount of money in this. So this was an example I just want to give you. If you guys are also merging fundamentals in your trading, that gives an extra boost to you guys. Always you guys need to keep the knowledge of both. You guys have set up, I have completely made you understood like how to trade, when to trade, and which parameters you guys should consider before taking the position. If you guys are also merging fundamentals in that, like for example, if you're trading a textile stock and you know the cotton is going to go up or fall, that can add booster to your trading position. Or for example, you are trading an IT stock, you got the setup in IT stock and you know the dollar is going up. There are just few days when they are going to declare the result, that you guys can assume that they are going to declare a very nice and the bumper results, because dollar was up in last 3 months. For example, they declared a result 3 months, when 3 months back the dollar was 64, and now when they are going to declare the result, the dollar is at 68. Means they are going to give a stellar result, and plus the setup is in your favor. You have the stop loss, so you guys should not miss such trades. You guys should wait for such trades, and whenever such trade comes, you just should go ahead blindly. I just want to say guys that please follow us on Facebook, subscribe us on YouTube, and follow us on Twitter for the regular updates of the market. I do tweet a lot. Links are in description basically. So thank you so much guys for watching this video. Hope you guys loved the video, and please like the video if you guys liked it. And disclaimer, all the stocks and methods which are discussed in this video is just for study purpose. You guys need to consult a financial advisor before trading or investing in those stocks, or before using those setups. Thank you so much. Love you. Bye. Take care. See you in the next video guys.